Welcome. Hope everybody's doing well. My name is Jeff Gibby. We're going to go ahead and kick this webinar off. Hopefully you guys can hear me. If you guys can hear me, go ahead and say yes or something in the comments so I know I'm talking to you. Thanks, Lib. Thanks, Al. All right. Today we have actually in the office a creator. So we're doing the setup a little bit differently today. I want to welcome you to the class. I want to thank you for coming. Let's go ahead and start with your favorite part. That's going to be the legal disclaimer. Today's demonstration is designed to instruct you on using MetaStock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. So let's go ahead and get to it, guys. Today we have a special guest. His name's Robert Deadman. Robert is a great programmer, and he's actually coded a couple of our most popular add-ons, like Performance Systems Plus and Trade Oracle, have been hugely popular. He brought this add-on to me, I'd say, a couple months ago over the summer, and I was very, very impressed with it. He did a really, really good job designing it. I want you to go easy a little bit today on Robert. It's his very first webinar ever, though. So it's good to have him. He's right here in the office. He's going to sit down and he's going to walk us through a little bit of information about the Ichimoku. I'm going to be here at another computer. So if you have questions, just feel free to ask them and I'll answer them via the chat. So let's go ahead and get started. Robert, why don't you say hello to everybody here?
Hey, everyone.
All right.
Okay, guys, we're looking at an icon chart here, not a MetaStock chart, but don't worry, we'll be getting into the MetaStock chart in a moment. The reason we're doing this is because we're going to give you a little bit of an idea of what Ichimoku is. There's lots of information on the history of it, so I'm not going to go into a lot of the details just because we have a lot to cover. But mainly, this is a method that was developed by a Japanese man. He spent almost 50 years working on it and released it to the public around 1968. And when I say the public, I mean the Japanese population. And it's been pretty heavily used there for a really long time. And now it's made its way to the Western world where we are able to go ahead and reap some of those benefits. In the meantime, it has gained an immense amount of popularity. The reason why is because over the almost 50 years it's been out, it's been really consistent in its ability to gain profit. And I'm going to go ahead and show you a little bit of the components here. What we have is you'll see that we've got kind of four things that you're seeing here. We've got a line back here, these two, and then this part here down the cloud. Now, this right here, I'm going to show you a little bit about the lines. We've got this first line here, which is called a Tenkan-sen. And what it is basically is it's a 9-period midpoint of the highest highs and lowest lows. Now, why would this be used and what exactly is going on here? In a way, the person who designed this did this the same way how we would think of using moving averages. But instead of using moving averages, he chose to use moving midpoints. And it's created a very interesting effect. And you can see how there ends up being a lot of these flatline positions here that you don't get in moving averages. In this case, this one right here is using 9 periods. Now, this one right here below it is the Kaijin-sen, and this one is 26 periods. Now, the reason that the 9 and the 26 were used is because when he created this, in the Japanese markets, they work on 6 days. And because of that, in a trading month, they would have 26 periods. So this bottom line right here represents 1 month midpoints, and the one above it represents a week and a half of midpoints. That's where it would be much like a moving average crossover, the way how it would be utilizing that information. But the nice thing is that you create these support lines over time that have been generated. It's a very smooth way of working with the data to let you see kind of behaviors that are going on, but it doesn't just stop right there. One of the key components that people recognize is this part down here. Now, this is really thick and big and bulky, but it looks a lot better in MetaStock when we move over to it. This part right here is called the cloud, otherwise known as the Kumo. The Ichimoku cloud, or the Kumo, is this widening part that follows along and actually kind of projects a little bit into the future. This reason why we're looking at an icon chart right now is because the icon charts can show into the future. In this case, what you have is you've got a part that is the midpoint between these two values and another point, which is the highest high and lowest low of the last 26 periods. Actually, I'm sorry, 52 periods shifted 26 periods. So the midpoints are shifted forward. And by the way, we're going to go ahead and post all this information here. You can find actually the way how these indicators are generated all over. We've gone ahead and, like I said, you can find it all over. It's basic information on the calculation. But here we're letting you actually see what it's doing on this cloud. So this cloud represents an equilibrium point. And in this point, this is where prices ultimately will want to go, but we see that they can move above or below this cloud. This is the third part or key component of Ichimoku, is the cloud. The first being the Tenkan-sen, second Kaijin-sen, and then the cloud. And these are made up of what they would call senku spans, A and B. And then back here, we've got another indicator, which is basically the closing price shifted 26 periods backwards. So we have the cloud, which is shifted 26 periods forward, and the closing price shifted 26 periods back. These are the main components of the Ichimoku. Now, we're showing you here, again, because like I said, we can go ahead and do the projections, but we're going to go ahead and move over to MetaStock. I just wanted you to see what they look like on a regular chart, how people are going to be representing them. So here we're looking at a MetaStock chart, which has MetaStock's implementation of Ichimoku, along with our template applied. Now, the main product we are showing, obviously, is Ichimoku Master, but we're showing how we've been able to implement some of the projection issues here in MetaStock. When you apply the MetaStock indicator, it goes ahead and creates this right here would be the cloud. And as you can see, if it's green, then you've got the faster Senko span A moving above Senko span B. And if it's here in the pink, it means basically the Senko span A is below the Senko span B. But MetaStock can't plot past the end of its chart. So what we've done is we provided another window up here, which shows the closing price. And this would be the current closing price. So it'd be the same price as would be over here, except we also have the Senko spans plotted in the future so we can see what they look like. Now, in this case, we're showing it on the euro, not on the DIA as we were before, but the same concept applies. This allows you to actually see those projections into the future where you wouldn't be able to see them down here. And then we also have the Chico span, which is that closed 25 or 26 periods ago. Now that we're here, we're going to actually show you a little bit about what's going on with these signals. I'm going to go ahead and bring that up. Now, there's one main signal that is one of the components of Ichimoku, and that's what's called the TK cross. It's basically the Tenkan Kaijin cross. And this is where it works like your moving averages, where you're fast when your 9 period crosses above your 26 period or crosses below. Now, there's different times that mean different things. So, for example, if we're on this side of the cloud and we have a cross down, that means something different than if we're above the cloud and we have a cross down. Ichimoku Master will show you some of those differences, but the main things we're looking at is what kind of things are we trying to get on board. Now, Ichimoku is a trend following system. That is what is intended to be. It's what it was designed for the beginning. It has the wonderful benefits of being a really, really great trend following system. Like every system, it has its detriments, and some of those are going to be that you can get whipsaws. Anyone who tells you that any system is going to be perfect on everything we call them liars. But basically, there is a risk, and there's always going to be some aspect of loss. But Ichimoku is really good at trying to help you stay out of a lot of those whipsaws, and it's got these components for working with it. So one of the things that it tries to do is it recognizes that if price is traveling inside of this Kumo here, so for example, you can see price is inside of here, you shouldn't be trading. It's not a matter of whether you should take a long or short. You shouldn't be in at all. So that's one of the ways it tries to protect you as a trader, by letting you see when it's in an equilibrium point that you should be staying out of the market. Ideally, you would take signals that would occur on whichever side of the Kumo the price is, if it's on a side. So right here, where it's in the middle, take no trades at all. Here, where it's now on the upper side of the Kumo, you would look at potentially taking long positions. Same thing down here, where you could look at taking short positions. Now, remember we talked about the TK cross like a moving average. What we're concerned with is that we have a TK cross in the direction that we are going. So for example, if we have a TK cross down here that's supposed to be a bullish TK cross to go up, we're not necessarily going to take that right now because it's on the wrong side of the Kumo. What we'll do is we'll wait for it to come above the Kumo, for the price to come outside of the Kumo, and then as long as our last signal that we got in the TK was a bullish one, then we want to take it long. The same way that if we get a short position here, but we're still above the Kumo, what we'll either do is wait for it to come back around, basically where it created a retracement and came back, or wait for it to come the other direction. But we're wanting to make our decision when we get a bullish TK along with the price on the same side of the Kumo. Now, price being on the side of the Kumo and the TK cross are the two main signals that define the primary basis of Ichimoku. There's a lot of other components, but those are the main things that people are looking at to say, is this a qualified position to be looking at? Now, it's not the only thing, but it's the first things that people are looking at. Those two conditions are primarily meant to be met. After that, however, there are other portions that are meant to be met, or at least to give you more confidence and comfortability in them. One of them is this interesting point, which is the Chiku span. It's this, all it is the closing price that's 26 periods shifted back. It seems like it doesn't have any value. Why would you do that? But what it does is it lets you see where there are aspects of low volatility. And it also lets you see how the price is reacting compared to the past. So for example, if we look over here, we see that the Kumo, or I'm sorry, not the Kumo, the Chiku span is starting to trade right along the side of price. And we notice that because right here, for these periods, it's been stagnant. And so if this right here starts coming and traveling within the same value of the current prices as they're going along, so if this is the price we're looking at here, we see that it's going on back here, then we probably don't want to be in there and make any trading decisions. That if we're in one, we can hold it, but we're certainly not looking at trying to take a new trade, because even if we get a TK cross signal, there's not the volatility that says it's going to really go in either direction, and it could be pulling back towards the Kumo. We want to wait and see if this Chiku span breaks above or below price. In a way, you can consider that almost to be like a momentum indicator, not by itself, but in its position against the current or against the price at that time. So here we see that the price broke out, and because of that, 26 periods ago, we see that the Chiku span breaks out of the price. And so we can now look at taking long positions. Right here, we see that a cross, or the indicators came together and broke apart. So now, okay, we are now in a position where we've got the Chiku spans outside of or above price. We've got a TK cross that's a re-entry to get in, and we're on the same side as the Kumo cloud. That's a valid re-entry right there if we're looking at something like that. So that's another way that it keeps you out of positions when you could potentially get into whipsaws. Again, nothing's perfect, but when it's traveling within price, then you can see that there can be an issue. The idea would basically be is if it's trading at the same price it was 26 periods ago, it's probably not something you want to be playing with until it is able to resolve that issue. Now, let's see, there's a question about, is that a cross or a touch? Are you talking about this part right here, I'm assuming? It's not, it could be viewed as a cross. You could have used that as a takeout if you had wished, or if you would wish to do so. The rules for when they come together are not very clear. The way how Ichimoku had really defined them, the idea would basically be the assumption that one is always greater or less than the other. So in this case, you could have looked at that as a protective exit and then as a re-entry, or you could look at that as, it never really got me on a state. It would be somewhat subjective at that point, and you can go ahead and make that decision. In my case, I would probably wait for it to hold. And now, of course, I'm saying that with hindsight, it makes it look like I'm making it up. But just because if they're traveling together, there's probably a reason, and I want to see what's going to go on. So I would probably be looking at using my Kumo as my protective area. Usually, what I will do, and this is one of the things where stops are not very clearly defined in the Ichimoku method, but we've gone ahead and given you some information in Ichimoku Master to deal with it, is usually the Kaijin Sen could be a stop loss for when you're moving up. When you're down near the Kumo, the top of the Kumo or wherever as you're coming down would be a potential place to stop. And then the bottom of the Kumo would be an absolute stop no matter what. If it crosses through here, there's no reason to believe that prices should be continuing to go up. It's gone ahead and gone down. My personal strategy, and I'll just give you this, the way I look at it right now, is usually right when I'm entering. So if I'm coming in and I'm getting an entry right here, I'm looking at this and saying, okay, I've got my signal, I'm on the right side. Here I've got my prices, my Chikou span is out of prices. However, I'm so close to the Kumo along with my Tenkan, I'm going to go ahead and take the Kumo as my stop just because it's close. But as this comes up, then I'm going to go ahead and look at this as my stop loss. As it continues to go up further, I want to have the cross be my exit position and maybe not necessarily view the crossing below the Kaijin Sen to be my stop loss, but I want to go ahead and look at an exit signal instead, just because it's pulled farther away. And this right here now represents too much distance for me. I don't want to lose all that, especially since a lot of that distance right there is where I gained a lot of my profit. So for me, I like to change as I go up. So if I'm looking at this part here, I would look at this right here as a trailing stop because it's so far away from the Kumo and these are so far apart, I'm not looking at an exit signal coming up out of nowhere. An exit signal being a TK cross in the opposite direction. Remember, exit signals are different than stop losses. Stop losses are just meant to protect you when things go wrong. And you know, your exit signals are saying that there's actually a reason to believe that there's a change in direction. So in this case, like I said, that's how I would do it, and actually, or how I do it. You can choose to do whatever you want, but we'll go ahead and show you how Ichimoku Master shows you some of that information. Now, in looking at this, one of the things that's been kind of a disadvantage with Ichimoku is when we start looking at past information, trying to figure out where we should or shouldn't have placed a trade when we're trying to learn how to use the Ichimoku method. The reason why is because if we're looking at some price back here, we want to know where's 26 periods ago and where's 26 periods in the future. And the thing is, unless you're actually counting bar for bar, you don't know. And this can get really messy as these indicators start mixing together. If you're here and you're trying to figure out where is the 26 period ago, and you're here trying to figure out which is the 26 period in the future, is it covering this area or over here? It can be really much a pain in the butt. So that's like one of the disadvantages. While it's really great for giving you information on the current bar, it can be difficult to gain confidence in it without having to see how it would have succeeded or failed in the past. And also helps you to gauge your idea of your stop losses. we actually can work with that through Ichimoku Master. As long as we're looking at this, though, like I said, you can see how we're able to then view the parts in the future. We always know that if this right here is our closing price, we can see in the future, and that's how we've accounted for it. But we've also, like I said, in Ichimoku Master, solved the problem for you by creating an expert advisor. I'm going to go ahead and pull that up so you can take a look at it. Okay, so here what we have is the current information that it's giving you on Ichimoku Master. Now, or at least as far as the euro. Now, we're using this, the euro as the example. In general, you can do what you want. I would recommend you probably don't do the things that a lot of people would say. It's like, you know, stay out of penny stocks because they just don't move the way that clouds would work. Since it is a trend following system, you might want to deal with some securities that are more opted to trending. Commodities are really good. Foreign exchange is really, really good. And of course, there's some basic, you know, your general basic stocks, some that are always just in a general trend mode and aren't whipping all over the place. The nice thing about MetaStock Explorer is you can just go ahead and create a filter that goes ahead and narrows down the groups of stocks that you really are comfortable with. You know that, you know, I may not necessarily know what the trend is, but I know that they're going to do one at some point. I just need to know when I'm getting in and out. Go ahead and create your little your sub list, and then go ahead and you can run explorations. And Jeff will show you about running explorations. But for here, what we're looking at is, as this is applied on this bar here, we can see what the values are for the Ichimoku indicators, as well as for what their signals are and what's been occurring. So here's the nice thing where it has, like I said, it'll show you the last TK cross occurrence was a bullish one, occurred 69 periods ago. So if we're on this bar here, we see that it actually occurred realistically back here. So this right here isn't considered to be a cross because it's a merge. And like I said, I myself don't consider it to be a cross because I want to stay in and see where it is. And so this right here helps you to get that delineation. Now, granted, here we've got a condition where everything's showing bullish, and we see that that's obviously the case. That's probably not the time when you're wanting to look at getting into a trade. Really, you're wanting to look at when it's back here. To see whether all the information is going in your order or not. The nice thing is that you don't actually have to count the bars back to see where things occur. Ichimoku Master does do that for you and figures out where those pieces should be. So you don't have to see where exactly it was, and this is what helps to build up that confidence level. So as you can see, what we've done is we've brought it way back here where this is occurring. And we can see that we've got a lot of these things that are telling us what should be happening on the chart at this time. You don't have to do the counting. It helps you to determine this or get your comfort level yourself. So on this bar back here, we can see, yes, we've got the prices in the same direction as, or bullish to the Kumo, current Kumo direction, the future Kumo direction. We want to see what's in the future. That's what we're looking up at the top. We want to see where the Kumo is pointing out. But the two things here which are interesting is we see that the TK cross occurrence was bearish. The most recent one had happened 9 periods earlier, back here. And the Chiku span is neutral related to price, which basically means we see back here the Chiku span was interweaving within price. We don't necessarily want to be in a trade at this point. If we go to the next position, however, it goes ahead and recalculates and sees now we've actually got a strong TK cross signal. I should let you know that the way how it's viewed is that if you're a bearish TK cross and you happen below the Kumo, that's considered a weak signal. If you're a bullish, if you're a bullish TK cross in the Kumo, it's a neutral. And if you're bullish above the Kumo, it's a strong. In this case, our TK cross here occurred above the Kumo, so we have a strong TK cross signal. And as we can see, the Chiku span has now gone above bullish related price. This is the first time we see all 6 values line up for bullish, which creates the beginning of a nice bullish trend. Back here, we can see that there can be other signals that can occur. And if we come back to some of this part here, we've got price and a TK cross. We want to bring it over here. Let's see. Just so I can take that part off. Yeah.
Yeah, you got it.
Just a moment. There we go. And at the point of the initial cross, what we want to be looking for is what's going on with these signals. Okay, here we have a point where a TK cross occurrence occurred. It's bullish. But here's the important part. The Chigu span's relationship to the Kumo was neutral, and the relationship to price are both neutral. Because of that, even though this might consider to be a general entry, just because of its uncertainty, it's not necessarily recommended at this point. And it will keep you out of there for most of that. Again, it can get you in, it can get you whipsaws, but it tries to protect you from the variations that can occur. That's the thing I love about the Ichimoku method, is that, like I said, it's really great on getting in on the trends, and it tries to keep you out. Now, unfortunately, one of the downfalls is that it doesn't have those fixed set of exit criteria, but you might want to go ahead and create your own when you're looking at that. And what we've gone ahead and done is given you information as to what types of exits are available at the time, if they're going to be a stop loss, or if they're going to be some type of exit if it's going to occur, if it's going to be a TK cross in the opposite direction. I'm going to go ahead and go to the last position here so you can see kind of a little bit more detail on that. And here we can see that it will show you, if you want to take a tight stop, you can do it with the Kaijin Sen, which is right here. If you kind of want to do a medium stop, you can do it down here at the top of the cloud. Or if you want a loose stop, you can do it down here at the bottom of the cloud. The nice thing is that it also lets you know for these two values, not necessarily the value on this bar here, but it's going to let you know the value one bar out, because that's really where you want those stops to occur. So, like I said, this helps provide that. Now, we're going to go ahead and get a little bit more to this expert advisor here to show you some of the great parts on it. We actually provide 3 expert advisors that are all based on the same thing, but they're designed for different comfort levels and training. A lot of times you yourself may not necessarily know a lot about Ichimoku, and you just might be trying to get your feet wet. You're trying to learn, get what's going on. Because of that, we actually have this complete expert that gives you every piece of information you could want about it. Besides giving you all the basics up here, telling you what the values are and what the orientations are, it makes sure that you know if there's a TK signal, here's what the signal actually means. That's all going to be here in this black. These right here are going to be fixed on every or all the time. This value information doesn't change because what describes a TK signal doesn't change. However, this part down here will be very specific as to what's going on the chart at that time. Now, what it's basically telling you is the same information that you're going to see up here, but it's going to explain why it's doing that and what it means. For each of the signals, it will explain what it is that it's doing and why it is doing it at that point. This is great if you don't know Ichimoku very well and you want to go ahead and get an education. As you look at each bar, you can get an explanation as to what's going on, and you can get a feel factor for the Ichimoku method. Now, once you've been using it for a while, you might say, you know, it's really annoying seeing all that information. I want to see something that's a little bit less. And so you can go from the complete to the description free. And as you get better, really all you care about, you've read the same descriptions over and over again. Now you just want to see what the information says about the signals. Now I still just want the interpretation. I don't need the explanation because I get it. But after a while, this is still going to come to the point where I don't necessarily want to see this every day. I get it now. He's shown it to me again and again. What do I do now? Then you can go to one that just shows you the basic information that you want to see very, very quickly. And this right here is a minimal. And this is the only information it shows, because once you're comfortable and you understand the method and you get what it's looking for, you just want to see the information quickly. And it goes ahead and shows you right here just the information you want to know. I just want to know which signal is bullish, which signal is bearish. Are there any red flags that are going to come up and say, don't trade right now? And, you know, where are my stop losses potentially going to be? So this right here, like I said, is really useful in that, and allows you, like I said, to see the information very quickly. And the nice thing is, like I said, you can go in the past and see what those values are very quickly without having to try and count bars forward, count bars backward, things that are very difficult to do when you're just trying to look at them. You're kind of eyeballing it and saying, well, I think it was kind of upwards here, but I'm not really sure how far in the future that was. And I think this might have been broken out of the past, but I'm really not sure how far back that is. And I really just don't know. So this is, like I said, a really great way for helping you get those feel factors and the training down. So now that that part is done, there are additional features that are tied into this. We're actually going to have Jeff come over and show you about using the Explorer with this, because the Explorer also allows you to go through a whole group of stocks and see this information, see those signals right in one shot. So if Jeff, do you want to come over here and show them what's going on that?
Sure. Okay. Okay, we had a few questions that came in that I answered, but we'll go ahead and revisit those as well. Of course, with MetaStock, what we've got is we've got the ability to do scanning. And scanning, if you've watched any of my other classes or other things that I've done, scanning is, I think, one of the most powerful parts of MetaStock. The ability to go through and say, okay, well, here's a list of instruments that I'm interested in. Show me which ones have a signal today. Obviously, is scanning. And you know, about 50% of you when we started this morning, this afternoon, I should say, said you use MetaStock. But for those of you that aren't familiar with MetaStock, we do have the ability to go in and say, okay, I'm interested in a market. Show me the stocks that I should be focused on. Show me the ones that I should be interested in. And to do that, let me go ahead and just kind of show you how that works and kind of how that works particularly with this product. So in our Power Console, what I'm going to do is I'm going to go from the chart right here to the scanning, okay? And we call it the Explorer. It's one of our trademark terms. I'm going to go ahead and click on the scanner right here. I'm going to click Explore. And the way Robert has designed this, he's boiled it down to one exploration or one scan. Okay. If you over it, what it's going to tell you is, like in column A, you're going to see a 2, a 1, a -1, or a -2, depending on kind of what type of a scan it is. Now, those correspond to, if it's a long main entry signal, and it just went away when I was trying to talk about it. If it was a long main entry signal, basically it's going to show up as a 2. If it's a re-entry signal on the long side, it'll be a 1. A -1 will be a short re-enter, and a -2 will be a short main signal. Okay, and then it's also going to give you the information on the cross of the conditions of the chart. So since that window keeps wanting to go away, let's go ahead and run the scan. So for those of you that are not familiar with the ability to scan in MetaStock, you do that. You just put a check mark basically right here. Okay, and what I'm going to do is I'm going to go ahead and kind of scroll down here and just kind of give you an idea of the information that you can scan. With our connection to Reuters, I could scan any of about 381,847 issues. So you can use this and you can implement it regardless of where you happen to be or what markets you might want to be following. Like, so for example, if you're in Asia, you could click on this button right down here. You could scan the Australian Stock Exchange or Ho Chi Minh, Hong Kong, pretty much whatever you want, right? If you're in Europe, same thing. You could just click on the down arrow here. It's going to list all the exchanges that are available for you. Most of you, I think it was about 52% of you that answered the question, the entry question, are in North America. So you might want to be able to look at the ETFs real quick, or the optionables, or both. You notice I can put check marks in multiple things, or in multiple columns here. I'm going to actually unselect that, though. I'm going to run a real quick scan, one that's going to not take very long. We do cover South America, as well as futures, as well as Forex, as well as indexes, pretty much anything that you're going to want to be able to follow, you're going to be able to scan for. So what I'm going to do, though, is just to do a quick scan. What I'm going to come down here and do, I'm going to just do the Dow Industrial 30. Okay, so I'm going to go ahead and put a check mark right here. That's going to scan through the Dow Jones Industrial, all 30 of them. This you can leave as load minimum. You don't need to load extra records to kind of get this back. And I'm going to scan for today. Now this is important too. Like you can, if you want to kind of go in and scan for a signal that happened 3 months ago or 6 months ago or 12 months ago or whatever you want, you can go in and you'll be able to scan and kind of see kind of what was coming up on that scan and maybe use that as an educational process. Okay, this one had a long enter and was scored at 4 or 5. I'll explain the score in a second. How did that kind of pan out? Allows you to kind of go back in time. But for now, what we're going to do is we're going to use the current exchange in time. If you want, we're going to scan this on daily, but you can set that to whatever you want as well. Now what I'm going to do is I'm just going to run on start exploration right here. Okay, and so it's going to go ahead and load in those 30 stocks. It takes a couple seconds to load, but you'll notice it's actually kind of goes through them pretty quickly. And I will tell you, it's already done. But I will tell you it'll actually go through even faster when you're not broadcasting your screen as well. It depends on kind of like what your internet bandwidth is because it has to grab a lot of data for it. Anyway, so it's done. Now, instead of looking at all 30 stocks on the Dow Industrial Average, for me personally, I like to focus on the ones that have an actionable signal. And so I already can tell you just on the Dow today, if that's kind of my main interest, instead of looking at all 30 of them, I only had to look at 4. That's how many that actually came out on this scan. Now, looking at the Dow 30 and all the constituents of the Dow isn't that big of a deal, but what if you're trading ETFs and you want to look at 1,300 ETFs? This is a really good way to kind of focus on the opportunity and be able to see what's there. Okay, so let's kind of walk through the report here real quick. Right here, you've got the signal. That signal is going to be 2 or 1 in this case. And again, if we kind of, as we were talking about before, 2 means it's a long entry. So it's the first time that it's crossed since it's been above the Kumo. Did I get that right, Robert?
Say that right again?
He wasn't paying attention.
Sorry.
So the 2 means, the 2 means it's the first time that it's crossed since it's been above the Kumo.
Correct. That's the first time once it's moved above. But you'll have a TK cross. It'll come down and then go back up without it having changed position of the Kumo. So that would be a re-entry if you were taken out and then wanted to get back in. It would be a -1 or a -2 if you were looking for a bearish condition instead of a bullish one.
Okay, thank you. Over here, what you've got is kind of the current conditions. Now, and the way I'm kind of explain this real quick is just to kind of go back in and kind of show you in the commentary, you had like the Tenkan span, you had these conditions, so the TK cross occurrence, the price Kumo relationship, the current Kumo direction, the future Kumo direction. All of these things are scored, and they can come up with a value of +6 to -6, depending on whether those are bullish or bearish. So obviously what we can see here is if we're looking at main crosses, probably Procter & Gamble would have the highest score. It had about a 5 score out of the total 5.
Total 6.
Or the total, yeah, the total 6. Walmart, it had a re-entry signal, and it actually had 6. So maybe these are the 2 I wanted to focus on, or way higher when I'm looking at the chart. So that's kind of how the scanning works. Again, it's one of my favorite features because, you know, as a trader, what I want to be able to do is I want to focus on the stocks that actually have opportunities now. And as an option trader, there's something like 3,500 optionable trades, right? Optionable stocks right now. This allows us to narrow down to the ones that have a signal, but it also puts this score so I can kind of give myself a mental note. Okay, these ones are 6s. These ones are 5s. Those are the ones I'm going to really kind of focus in on and see which ones I like. So that's kind of how scanning works. We do have a question that Bill asks, does it work for day trading? You can apply this to a 60-minute chart or a 30-minute chart or a 5-minute chart, whatever you want. It definitely is applicable to intraday charts. I know a lot of people use it for real-time trading out there in the wilderness. So you can apply it to any increment of time that you want. as long as you get the minimum amount of bars to form all the indicators, okay? Dennis says, is there any MetaStock support in Singapore? Well, we do support here from our office. Thank you for the question, Dennis. I appreciate it. We do have some local resellers located in Singapore, but one of the things that's really kind of pretty nice about our office is if you're a MetaStock user and you have a question, you're welcome to chat online with our guys. They're open from late afternoon to early morning in Singapore. And you can just chat with them right here. It's a really, really good way to get support. And I always get really, really good feedback about the quality of support and the people that are over there. You're welcome, Bill. Thanks for the question, and thanks for your interest. Mike asked an interesting question that I want to show you too. Does it show the main signals on the expert advisor? So let's go ahead and show that. Did you want to get back on?
No, go ahead.
Okay. So what we're going to do here, by default, Robert wanted to keep the charts very, very clean. So by default, what you're going to see is you're going to see the above Kumo cloud, the below Kumo cloud, and the inside Kumo cloud. And that's the way Robert likes it. I actually kind of prefer it with the arrows on the chart. And so I'll show you how to add them. I'm going to go ahead and kind of make this a little bit bigger. And what I'm going to do is I'm going to right click on the chart. I'm going to go to the expert advisor. I'm going to go to properties. Okay. And this comes up over here. It will, by the way, ask you for a password. Just click on cancel and you'll come to this same page. You want to click on this symbols tab right here and you can turn all of the signals on. So the signals that we're turning on right now are the TK cross long, TK cross short, close above the Kumo, and close below the Kumo. So if I go ahead and apply that to the chart, now in addition to being able to visually see the Kumo cross, I can see that it actually happened right here. And I'm sorry, that wasn't the Kumo cross, that was the TK cross, but I can actually highlight over it and it's going to tell me that TK cross happened here. I can hover over any of the patterns and it'll actually say, okay, well, this one is close above the Kumo. And so I can see where those happened on the chart. So it's a matter of personal preference. I'm a lot newer to Ichimoku Method than Robert is. I actually learned about it as I was learning about his product and kind of preparing my training video for his product. So for me to be able to kind of see that visually on the chart is what I prefer. And if that's the same for you and you're kind of new to the Ichimoku Method as well, I'd recommend that you plot these on the chart because it's a visual reminder of what you're looking for. Okay. The other thing that I really, really like, since we're going to start to talk a little bit about the expert advisor, the other thing I really like about this is kind of the scalability. So he's designed it in such a way that you kind of have a lot of education that's available for you. You know, I can go and talk to you a little bit about how Ichimoku Method was developed in the 30s by Kiju Sen, and I'm sure by the guy in my PowerPoint. Right here, and that it's been a method that people teach and use the world over. But then we come in here and show you 7 different indicators and how they work, and it looks like it makes a lot of sense, and kind of the way that things are kind of going in there make a lot of sense. But for me, as somebody that's kind of getting used to the idea of Ichimoku and what everything means, if I just want to come in here and look at like the euro today, I can see obviously we're above the Kumo. I can obviously see that we're above and that we're above here. But what this is going to do is very easily, it's going to tell me, okay, right now we're bullish because the TK occurred 69 days ago. Right now our price is a Kumo relationship is bullish. And all that means is that your price is above the Kumo, right? But it's kind of breaking this all down, telling me exactly where my support and resistance values should be. It's telling me where my exit should be. And then this isn't the same expert advisor, but if I attach the one that I like, the complete, it actually breaks down all of those commentaries for me. So all of these conditions that it's talking about, it's going to break down and it's going to say, okay, the commentary is a lot bigger now. And just to kind of give you the detail, I'm not going to read this all out loud, but here it says, okay, the TK signal. And keep in mind, the black part is the part that doesn't change. The blue part is the part that has to do with the bar that you're looking at. So as for me, that somebody that isn't familiar with it, it's really helpful to know that the Tenkan cross is a predominant signal of the Ichimoku trading system, similar to a moving average, but instead it uses midpoints, kind of gives me some basic information, but then it also relates it to the current bar and the current condition and the current state of the chart, if that makes sense. So the latest Tenkan Kijun cross occurred was a strong signal and occurred 69 bars ago and supports a bullish direction. Strong signals usually occur where there's a price retracement. So I think there's some incredible value from an educational perspective right here. There's lots of courses that are several $1,000s that'll just kind of show you how the Ichimoku method works. But this will kind of break those main functions of it out for you and tell you how to use it and how to implement it and how to apply them to a chart. There's some value there. But in addition to that, as you kind of start to learn things, you can kind of go down to the methods that are where it's just kind of giving you basically the scorecard. And I think it's a very, very well-designed add-on personally, which is why I added it to the catalog, by the way. So, but in any case, kind of want to talk a little bit about just kind of the main points. And we'll kind of wrap it up and we'll answer a couple more questions. I see a few more have came in, but let's go ahead and I just want to talk a little bit about pricing for this thing real quick. So let's go ahead and get back into this PowerPoint. Ichimoku Sanjin was the name I slaughtered earlier. He's the guy that created it. Now, these are the 6 main buy conditions, and we showed you how it goes and kind of scores all of those buy conditions, helps you find them, helps you scan for them, has a commentary that actually explains them. So all in all, to kind of create this, you do have expert advisors. You do have the ability to run that exploration. There's many supporting indicators that come with it. And there are different system tests that Robert designed as part of this to kind of allow you to go in and figure out maybe good methods using a backtesting type of a module.
If I can add something into this, one of the things also the Ichimoku Master is different than a lot of the other plugins is we've also opened it up. So for people who like to write their own indicators, they have access to all of the Ichimoku indicators for creating their own system tests as well. You're not just stuck with the ones which I've created. You can go ahead and make your own, choose which signals you want to include. And we've laid out in the manual how to do that, how to go ahead and include our indicators in your system design. So just another piece of information to have on that.
Okay. There's some more questions, and I'm definitely going to cover them too. This thing's only $399. It's a one-time cost. You don't pay for that every month or every 6 months. Here at the webinar, it's $299. And like everything that we do, it's a 30-day money-back guarantee. So you can give us a call to place your order. It's 800-882-3040. You can go to metastock.com/TSA-ICHI, for ICHI. And we also do have some reps. So if you have some questions, obviously we're going to spend a couple minutes answering some questions here. But if you have some questions that we don't cover, or you want to kind of get some more information or kind of a bit of more information about the product, chat online with us at metastock.com/saleschat. One other thing that I'll add, I know about 44% of you said you don't own MetaStock yet. So for those of you that maybe don't have MetaStock yet, we will throw in a free MetaStock trial. Now, a few of the things that I like about MetaStock are exactly what we're talking about. The ability to scan, the ability to test trading ideas, the alerting system within the program. One of the things I'm extremely proud of, and I've worked here at MetaStock for now 20 years in March, every single year I've worked here, we've actually been voted the best software program in our price category. And 4 years before that, so for 24 years in a row, it's been rated #1. Pricing at MetaStock, pricing for MetaStock after your trial, it's like $59. So it's a very, very affordable platform, especially if it helps you make better trading decisions. And if you don't have it, you should definitely try it out. And for free, it doesn't get but there doesn't get to be much of a better risk-reward ratio. If you kind of like what you're seeing, you put down $299. If you don't like it, you get your money back. That's the kind of risk and reward I wish I could get in the market, right? But so go ahead and visit us at metastock.com/TSA-ICHI, ICHI, just like Ichimoku, and you can go ahead and kind of get started with it. Let's go to some questions. And I'm just going to read these off as we go. It's in no particular order. If I miss yours, type it again. But we'll start with Mike T. Okay, he asked about the expert advisor buy-sell signals on the chart. I showed that. Charles says, thank you, great webinar. I'm planning to do swing trading of the US stock options. How can this product help you? Well, in that particular case, Charles, what I would recommend that you do is you'll just run your scan. With MetaStock, you have all of those optionables in, well, let's just show you. This is the same thing I do on a daily basis, right? So like if you come in here to the scanner, okay, the Explorer, I need to get out of how to, I should use our own trademark terms, right? But if we wanted to run that Ichimoku scan against something other than the Dow Industrial Average, I can just click right here. I can click on this US optionable stocks. There's 4,300 of them. I can run that scan and then instantly, well, within a few minutes, I should say, not instantly, but within a few minutes, I have a list of all the ones that have those major entry signals and those re-entry signals, as well as their corresponding score. And then I can kind of go in and kind of take a look at them and see exactly the ones that I want. So that's how it would work with you for options. And it doesn't necessarily have to be options. It's whatever market you're interested in, right? But for you, Charles, just right here, you've got a list of all those optionable stocks, okay? Fred Bradley says, how can I make the green and bar horizontals appear at the bottom of the chart? When I run the scan, these do not appear. Okay, so that's pretty easy. What's drawing this below Kumo and this above Kumo ribbon is the expert advisor. So all you need to do is make sure that that expert advisor is attached, Fred. So what you're going to do, oh, and thank you for using MetaStock, by the way. I should add that. But all you're going to do is just click on this expert advisor right here, and then there's 3 of them you can attach. So you've got the complete, which goes through all of the commentary. You've got the description free, which just gives you kind of the stuff that's relevant to the current bar. And then expert mode is what I'm going to call it, the minimal, which just kind of gives you this scorecard up here. So find the one that you want to attach. I'm going to use complete probably forever because I just like having those descriptions around. You click on attach, and then that will put the above below comos here. Okay, so hopefully that. James says this only works on MetaStock, not Ninja. Yes, it's a MetaStock product. Fred asks, I'm getting stocks on a scan that had signals that happened 10 days ago. How is that going to help? So does that true? Is that working?
With Ichimoku Master?
Yeah, it should have. I think you've probably got your scan set up incorrectly, Fred.
Yeah, that's what it sounds like, because usually would do it on the most recent bar if the data is actually present.
Yeah, so there's a few things that I can tell you to check right now, okay? Right here where it says exchange date and time, make sure this use current exchange date and time. Make sure that's checked, because if you've got this unchecked and this data is set at 7/21, it's going to look for a signal 6 days ago. So make sure that's checked. And that should really be the only setting. If it still happens, what I would have you do is go to our support chat, which you can find the chat link at metastock.com/customer, and they'll help you figure out what's going on with that. Okay. Okay, Yahoo asks, how do you use the upper window? That's a really good question. So with what the upper window is it's just a projection of the future cloud. So let me go ahead and draw a vertical line right here, okay? If we were to take this closing price and put it right here, it's gonna end right here. This just shows you where the cloud is gonna go out. So right now with MetaStock, we don't have the ability to plot past this bar. We're probably going to change that early next year. But right now, this just kind of gives you an idea of where the Kumo is actually going to go. And so, yeah, Kumo is basically support and resistance. It's, you use it as a measurement of support and resistance. And so that's how you'd look at it. This gives you an idea of the future direction of the security, gives you an idea of the future direction of support and resistance as well.
More specifically, it shows you where if the price starts to go come back, that's where it's trying to go back towards. So it lets you see in the future where the prices should be coming back towards for an equilibrium.
All right, Lance, who I'm going to assume is a Canadian. Thanks for coming today, Lance. Wants to know if it works in Canada. Yes, we do have all of the Canadian indexes and markets. I mean, stock markets and futures markets. So one of the things about Reuters, we have a partnership with Reuters. When I started, we were owned by Thomson Reuters. About 3 or 4 years ago, we bought ourselves back. But one of the nice things about our Reuters relationship is literally they cover 95% of the global market cap. Literally, the only market I wasn't able to get that I needed was the Jamaican Stock Exchange. So they didn't have it. 95% of the global market cap. If it's Canada, you're going to have it. If it's London, you're going to have it. If it's India, you're going to have it. They cover we cover 213 exchanges the last time I added it up. You can use this just about anywhere you're interested in using it. Okay. Graham, and that includes Australia, to answer your question. Ronald, at the moment, you can't put the future cloud on the same chart, on this chart. And that's a limitation of MetaStock, one that we're kind of going to have fixed up next year for you. But it's a good question. I thought Robert's solution of actually putting the future cloud here in its own window was brilliant to kind of get around that limitation inside of MetaStock. Okay. In any case, that's kind of the way. I don't see a lot of more questions. Robert, do you have anything to add?
Not anything as far as the questions, but I just wanted to say thank you for allowing me to do my first webinar for you. And I appreciate you for being a forgiving audience. And I hope that I was able to answer your questions and do it justice.
And I just said, give it a try. Ichimoku Method, one of the things I would have done, I think Robert, for his first webinar, did a great job. So I want to thank him for coming in. I remember how nervous I was 3,100 webinars ago with my first one. I think he did a lot better of a job than I did back then. I think one of the other things I would have talked about a little bit more specifically is how proven of a method Ichimoku is. And maybe he did talk about it and I missed it, but it's literally a method that I better go back. I'm not going to, Ichimoku Sanjin created in the 1930s. Am I getting that date right?
He started in the 1930s and used a lot of students and interns to actually design this over the next 30-something years to come up with it. So it was tested very thoroughly, and the great part is it's held for just about 50 years. Next year it'll be 50 years.
Yeah.
And it's still heavily used because of how reliable it is.
Yeah, he ended up releasing it in the 1960s. Late 1960s, and it's something that still people use today. It's something that people still teach classes about today. And if you're kind of interested in kind of implementing Ichimoku Method, now you've got a tool that you can use that's going to scan for that stuff for you. If you're interested in just learning a bit more about the Ichimoku Method and just implementing it in your chart, this is something that kind of helps you understand, okay, here's what I need to be looking at. Did this happen today? Was it bullish? Okay, what's this stand for? And it lays that all out for you. And it does it for $300. Like literally, like give it a try. And if it isn't something that works for you, you can get your money back. Give it a go. 800-882-3040, metastock.com/TSA-ITCHY. Once in a while, I feel like I go a little over the top with my pitches, but I just think it's something you should try. So, Trey, thanks for coming. Glad you enjoyed the presentation. This is our most popular question, the one you just asked, Yaya. We did record today's session. We'll have it ready and up on our YouTube channel in the morning. Once that's available, I will drop you a message myself and send it to you, just so that you know that it's up there and exactly what the link is, okay? All right, guys, that's the end of the questions. I want to thank you for your time. I really appreciate it. Great attendance, great audience today. And I want to thank Robert for driving in. Actually,
I appreciate you having me. So
it was a first for me too. This is the first time we've ever done a webinar with somebody in the office, which is kind of cool. So thanks for coming, guys. I'm going to go play with my kids, and I hope you have an enjoyable evening. And let us know if there's anything we can do to help.